Welcome to Share Talk, the only podcast where investors come first.
We have Paul Johnson with us today, who is the CEO of POW Metal Resources, which is a metal exploration development company focused on Africa. Good day, Paul. How are you?
Good day. I'm fine, thank you.
Good to hear it. We like to do things a bit differently in Share Talk at times, so I'm going to throw a curveball question out there to start with. It's been a tough time in junior mining. Can investors make money there?
Yeah. Well, I mean, that's the question. The most investors, no, I would say, and I think there's a simple reason for that, and that's that junior mining. If you make money, and I have some experience of making quite large amounts of money in the junior mining space, and losing a fair amount on occasions too. But when you make money, it's boring. And investors on the whole, and private investors in particular, don't like boring. They like instant returns. They like to get involved in stocks that are popular, where there's lots of discussion, where everyone agrees with them. And that's generally stocks that have already had a big rise. I think history has shown that if you take positions in unloved companies that have significant potential because their asset base, their management teams, their financing strategies and so on are well set, that if you're patient and you can hang on through a bit of volatility and quite a lot of boredom, then you have real potential to make big returns. So, yeah, I think it without being too cheeky with my answer, I think yes, you can make money, but you have to position yourself in a manner that enables the returns to come to you in time. And not get involved in all the hype and craziness, and take those positions when stocks are unloved and are on the floor, when the prospect of a revaluation is remote, and then sit and wait and watch developments. So I at the moment, I would say now is a phenomenally good time for people to get involved in junior mining space. Don't watch the top 10 list on whatever bulletin board site or stock site you use, and look for the stocks that have got a massive rise behind them. Look for the stuff that's interesting, intriguing, where there isn't much discussion, but the potential of news flow driving a revaluation is there. And then maybe you can make those life-changing returns that we all hope for.
Great. Well, thanks for the investment advice. Let's go back to you being the CEO of POW Metal Resources. It's been quite a while that you've mentioned anything in the media. So, can we get an update on Botswana, please?
Yeah, we've been quiet in terms of the media interviews and so on, partly because Christmas time and so on, and I know people have plenty of other things to do, but also because we've been working in the background. It's been probably the most intense 2 to 3 months of my working life, and a lot of that work is, of course, is not really visible to the market until you start to make regulatory announcements and do interviews such as this. Now, Botswana, we executed on our right to earn into a 40% position in the Malopo Farms Complex project in Botswana, which is held by Kalahari Key Mineral Exploration, our Botswanan company. It's a single project within that company. We also, POW Metal Resources also owns 18.26% of the equity in Kalahari Key. So we have a double exposure. And this is something I did previously with Metal Tiger when we took a position, in the Botswana project, which part of which has recently been sold for a substantial sum to Sandfire Resources, effectively. And we took an equity holding then in our partner, which was MOD Resources, and we also had a project stake. And the reason for that is quite simple, because if someone comes along and thinks, I like that company and I like that project, so a major firm comes along and decides to buy the holding company of the project, then we have a shareholding, so we get the upside from that potential acquisition, and that gives us working capital, which enables us to stand our ground with our project position if we have to fund ongoing exploration work and we want to maintain our percentage. So it's a strategic move to have an equity position and a project level position. Now, Malopo Farms bears so many similarities for me to back in the day in 2015 and 16 with Metal Tiger, when we were looking at the projects in the Kalahari with MOD Resources. There's been a lot of work at Malopo Farms undertaken over the last few years. They've done helicopter airborne electromagnetic work to identify nickel, copper PGM targets below the surface, because in the in Botswana, the targets are below sand cover, so you have to use special technology to find them. You can't easily find them at surface. They've also done ground geophysics, which our investment into Kalahari Key in April funded effectively. Now, that ground geophysics work has kicked up a surprise, and that's that they were maybe expecting to get 2, 3, 4 decent targets, but it's actually produced 11 targets, of which 5 or 6 are the absolute key. So it's been hugely successful. And when we looked at the data and the information that came out of the ground geophysics, we made the decision in December 19, so a month ago, that we just had to exercise our right to earn in. Now, the cost of that is $500,000. And what we have to do is fund exploration drilling in 2020 and spend $500,000. And when we've spent $500,000, we have a 40% direct project interest. This is fascinating stuff for me, because if you're a junior mining investor, what you want is the concept that you could have in the near term a drill campaign that can put a hole into a target. And we're talking 11 substantial sized targets here. Put a hole into a target and potentially have a life-changing discovery. Now, we have that position with Power Metal Resources, with our partners Kalahari Key. We also raised £700,000 in December, which was announced, of which part of that will cover the costs of the exercise. So the money is already in the bank for that particular exploration program and for that earning. So we're in a unique position where we have major targets, we have near-term drilling subject to some final preparatory works and approvals and so on, and we have the cash already sat there to fund it. So people don't have to worry about discounted placings and all the rest. We're well set to crack on. So really, our job now is to start to communicate in more detail about what these 11 targets are, what the potential of the project is. And then, of course, as things mobilize into drilling in due course, then we start communicating about that. So we've got an exciting few months of news ahead of us, we believe, in that project. It's this kind of stuff, is high-risk exploration. But if we strike with those drills, it's potentially life-changing for our investors. And that's what happened in Metal Tiger, where we with our partners, found a major copper deposit in Botswana. And that's what I want to happen in Power Metal Resources.
Great. Well, thanks for bringing us up to date with Botswana. Now, Paul, I've got to ask the elephant in the room question about finance. You have touched on it quite a bit, but obviously this is about the confidence for the investors. So how confident are you from that aspect?
Well, I'm confident in myself. I'm confident in Power Metal Resources. Because we just raised 700,000 in December. It was not a difficult raise to do. We did it ostensibly on the back of our, the potential in Botswana, and with the earning, which is, I think, investors generally speaking who came into the placing understand the potential of that project. So that's fine. We historically in recent years, I've not been tolerant of heavily discounted placings. In our company, we've always been, on my companies, we've always been able to raise money reasonably when we needed it without absolutely killing the existing shareholder base. I want people to be confident in our business that if they buy shares on the market, that they aren't going to suddenly find they're whacked with a heavily discounted placing, because I think that's absolutely horrific. If you put money into the company, you should have confidence that management team will protect you and look after you. And that is my primary role as a CEO of a company, is to protect my investors by raising finance when required on a sensible basis. But right now we just raised and we're in a good position. And so, yeah, I'm happy with things. Now, as we grow as a business, it's important that we maintain a good, strong, robust financing strategy. Once your market value goes up 5, 10, 15 times, or your share price in particular, then it's actually quite easy to raise money because you get that popularity bonus. But when you're in a small cap environment, under 2 million, when financing, generally speaking, is quite tough, I see a lot of directors, a lot of companies really struggling with it. And I don't want investors in my company to worry about that side of things. So, yeah, we're comfortable, we're good, and we're looking forward to a very proactive period of news flow in the coming months.
Great. Well, good to hear your view on it. And like you said, hopefully we'll start to get some more news flow from you. And as always, it's been a pleasure, Paul. So hope to speak to you soon.
Great. Thanks very much.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.